Welcome to C4S classes. Today we are discussing a 15 marks question on bad banks, a topic which is relevant to RBI examination. So the question is, discuss the concept of bad banks in the Indian context. Explain how bad banks operate and their potential impact on the banking system. How bad banks may address the challenges that Indian banks face with NPAs. So let's discuss the concept of bad banks before discussing the answer. So let's suppose these are banks with NPAs, right? So what government has done is it has created a bank which is known as bad bank. Now what this bad bank does is it will purchase NPA from banks. Now how it will purchase these NPAs? It will provide banks with 15% cash of the worth of NPAs and 85% would be security receipts, right? So in this bad bank system, banks having NPAs will sell their NPAs to a bad bank, and this bad bank is supposed to utilize these NPAs, restructure them and sell it to other entities and make, and this money that comes, this is some entity where this entity can be market also, right? And the money that is generated from this selling will be given to the banks, right? And the whole ecosystem of these bad banks are protected by government security. So in case the bad banks are unable to sell the assets that they procure from these banks, government can provide the securities or the money to the banks, right? These 85% security receipts would be converted into money and provided by the government to the banks, right? Now let's discuss the answer for this question. So in introduction, we'll give generic definition of bad bank, right? Here we have written it refers to financial institution specifically established, purchase and manage NPAs of banks and financial institutions, right? And here we will also give an idea about how this whole ecosystem would work. Now let's move to body part of the answer. In body part, we'll first introduce Indian context of bad banks. So here we'll write about bodies like NARCL and IDRCL. Here we'll write about NARC and IDRC and their functions that are specified by the government, right? Now next we'll discuss other part of the question. So in first block of our answer, we'll talk about operation of bad banks, right? So here we'll talk about its procedure of asset acquisition, funding and capitalization, asset management, time horizon. This we have discussed in the previous slide, right? Next block of the answer would discuss its potential impact on Indian banking system. So here we'll write about that bad banks will help us improve balance sheets of the banks. It will increase our lending capacity. It will also lead to stability in the banking system. So here we can argue that now that bad banks are responsible for handling NPAs, our commercial banks can focus on core banking activities, right? And bad banks would also help in centralized management of NPAs. Okay. Then our next block of answer would deal with how bad banks can handle NPA challenge. So here we can add some data also regarding NPAs. So in newspaper, one data came that banks will write off 10.57 lakh crore during last 5 financial years, of which 5.52 lakh crore was loans pertaining to large industries, right? So here we can give our context of bad banks, that bad banks could help us stop such write-offs and would provide us the opportunity to help us gain more money from those NPAs, right? Next, we can write about advantage of bad banks over commercial banks, as they are mandated for dealing with NPAs and they have legal backing, right? Next, we can discuss the lack of resources with commercial banks. So having a bad bank specified for NPA procurement would be a good idea, right? So we'll close our answer by saying that how bad banks can lead to healthier and more robust banking system in the country. So that's it for today. Thanks for listening and have a nice day.